Although the majority of African countries have low levels of public debt, there's a worrying trend of high and unsustainable debt levels in about a dozen of the larger economies on the continent. The Collaborative Africa Budget Reform Initiative, or CABRI, recently launched a program that's supporting public debt management and board market development reforms in Africa. The opening panel of CABRI workshop in Uganda shared their views on how Uganda can promote and enhance fiscal stability and thereby build trust and credibility as a reliable borrower.
Such a pleasure to be here and to be facilitating this discussion. So the topic that is going to take center stage for this conversation is around the most important commodity in the world. Any guesses on what that is? And it's not oil, it's trust. Without trust, you are nothing. As a very wise person once said, the best human partnerships are built not on mutual interest, but on trust. When we build trust and credibility, we can build everything else that we need to build. So that's what this conversation today is going to be about. Where are we? Where do we need to go? And how do we get there? What have been the main sources of financing and how sustainable are they?
At that time when we were experiencing the 7% growth, you would realize that a big percentage of our financing was grants and concessional loans from development partners. Right now we have moved to a level of having about 80 to 85% of our budget being domestic funded. Then the other 15 comes from these other sources where we also realize that the concessional, the grants and the concessional are reducing, and we are moving into the non-concessional and domestic borrowing from the domestic economy.
Borrowing is shifting, whereas it used to be grants and those concessional loans, which would have maybe an average interest rate of 1.6%, 28-year repayment period. Now we're looking at rates of 6.2% and maybe 11-year repayment periods. Is the Africa Development Bank at all concerned about debt levels?
No, we are not, at least not yet. We do not believe that a debt crisis is looming. We don't, and that is factual. If you look at the current debt to GDP ratios for East African countries, they are still significantly low.
There's a lot more domestic borrowing now. Of course, this has an effect on the private sector and the private banks. We're seeing interest rates going up to as high as 24%. What effect does this have on you when we talk about domestic debt markets?
There's been a lot of debate about high interest rates in the market. And I think there's a bit of a misconception out there about why the rates are so high. And there is a subliminal divorcing of monetary policy from the interest rates. And I think that it's important that the public understand that when the central bank raises their CBR rate, they do it for a bunch of reasons. One is to control inflation. They have a monetary policy target of keeping inflation at 5%. And that has a knock-on effect on what we do.
Maybe you can, Frederick, comment on the sustainability and what returns a debt brings, and how is the government thinking about that in terms of the long term?
Nancy, I think from the government side, we have a national debt strategy which emphasizes that we should not borrow for consumption. However, from the domestic side, we borrow to redeem those earlier borrowings and also fund the budget.
A lot of what Uganda needs is very long-term capital, patient long-term capital. And a lot of that comes through savings.
We need a central debt management institution that should have capacity to look into all these issues we are raising, so that at the end of it, we say whichever money we borrow goes for the right investment.
Two things. One is discipline. Discipline in planning, borrowing, and committing resources to where they are meant to be. And the second, most important thing, is communication to avoid misunderstandings.
So it is all about context and communicating that context very clearly. Thank you very much for your time and your attention.